You're welcome. Today we're going to continue our back testing and let's get right into it and let's complete Euro USD so that you can go to the rest of the other pairs. Also see the results. Still have about 10 months to go. So let's complete and see the results. So for those first time subscribers or viewers, I just marked my high and low on the daily, which is here and here. I marked my kind of interest, which is on the 1 hour, it's marked by this line and this line. Found a counter trend on the 1 hour, because on the daily it's going down, but the 1 hour shows as if it's going up. Found my RSI, which is 67, is not an overbought area. I usually look for an overbought area, but you can see there's some divergence. 85, the RSI, and our area of interests are formed, which is here. The one is formed here, more like a fair value gap. So I place my sell, and I'll just be repeating this throughout my videos. That's the trade process I usually undertake. So I'm stopped out. Let me close that. So this is what I'm going to be doing throughout the video. So let's follow. Yes, so I usually look for one more trade. This is the area which I consider as a point whereby I'm still looking for a trade. Still defines my area of small area of trade right here. So I'll still look for one more entry, which is the same thing as I did here, looking for the second bearish candle, since I'm looking for sells, and it has formed here. So let me sell. Stop loss will just be here. been stopped out, which is okay. So I wait for price to leave that area of trade. Let's eliminate all these lines. So our area of trade was between here and here. So let's wait for price to leave that area of trade. Look for another one. It was left. So found a new high here, which is lower than the previous one. So this is debatable, but one would consider this as a kind of interest because it's a bit higher than this low. So find our area of trade, the low, the high has already been marked, kind of interest, and the open and close of it. No counter trend is being formed, not yet. Should be a clear counter trend. I don't see a clear counter trend. Price is out. And the kind of interest has been formed. So let's mark our lines. 4 lines usually on the daily. High or low. Open and close. Trend line. So price has broken this high. It's still going up. Just waiting for it to break the trend line. That was broken. Let's see our RSI 65, 69. Divergence, but not an overbought area. Maybe so that one still 66. So in this case, I'll be looking for buys because it's not an overbought area. If it was overbought area, I'd still be looking for sells instead. So maybe if I'm to draw my areas of interest, in this case, would be these areas here. And this fair value gap here. In general, I'll be looking for a second bullish candle within this area here. The start of the trend line. So let's wait and see. Price hasn't yet reached the area. It has formed a bullish candle, a second bullish candle here, just above this low. So my target profits are usually here. Stop loss just this line here. Place my buy. Stopped out, which is okay. One more trade to go. Yeah, second bullish has formed, which is here. I my stop loss will always be around here. Target profit is all the way up here. Stopped out, which is okay. So let's look for another area of trade. Open and close of the candle of interest, which is here. Look for the counter trend line. Like price had a sideways break, but an area of interest has not formed, so let's wait for it to play out. Okay, sideways break, area of interest has formed here. Let's look for the high that caused the break, which is here. 77. Was there a divergence? 72. A divergence, but still this overbought area probably caused this break, sideways break. So have our area of interest here and here. Let's wait for price. Price has gone to that area. Yeah, second candle has formed. Place my sell. Stop loss just right there. Let's wait for price. Stopped out. One more trade to go. Let's make our limit here. So now this candle is really bearish. It's a big bearish candle. So the stop loss would be all the way up here. But it's a risky trading that if it goes against you, you have a very high loss, right? So it's debatable, but there's still the risk to reward ratio is almost a 1-to-1. But because this candle is so big, I wouldn't advise you to enter at the moment. So, but let's wait and let's play it out. I'm not going to enter me personally, but let's put our stop loss there. Let's play it out and see if the strategy is lying or not. So you can see it went up and stopped out. Yeah, so that means you'd make a big loss. So that's why I prefer these moves. You don't place a trade at all. Rather look for another one. So let's look for another trade. That's not an bearish engulfing. Okay, we have one from there. And place my sell, stop loss just above there. It's here because it's below this area there. So I'm out. So that's my second trade. I'm going to wait for price to leave that area of trade because there's no reason to chase markets because price can come up, go down, up, down, up, down. Those are either losses or profits. So me, I have a limit of 2 trades in that area of trade here because there's no guarantee that each area of trade must give you more profits and losses. So if there's no guarantee, just set a limit on your trades. So let's wait for price to leave. Price has left that area and has formed a kind of interest as well, which is up here. Here. So there's no trend line formed that looks viable, so let's wait for it. This has gotten out. And the kind of interest or high is here. Yeah, this looks a more valid trend line. Okay, price has broken here. Let's see. RSI of about, is there a divergence? 78.6, 78.9, no. The area of interest has been formed, which is here. Is there another one? There's another one here. So I'll wait for a trade in this area. So we have a bearish candle here. And to place a sell, stop loss just here. So stop loss area is usually the one which is comfortable for you. Some people might have it here. May tend to make it somewhere just above this wick here. Alright, just above these wicks. Usually it's usually above wicks. So let's play it out and we see. So my target area is here, the low we marked. so I've been stopped out, as you can see. Let's wait for one more trade. Okay, that's my sell. Stop loss just slightly above there. Okay, price has gone above and I'm out, so I'll look for it for price to leave that area of trade to look for another one. The price went back in our direction, but always follow the strategy. From another area of trade because of the kind of interest. I mean, you can modify the strategy depending on what you feel or your personality. At least to the fundamentals, you're getting the fundamentals. Okay, price looks, let's see this area here, RSI 66, 76, some sort of divergence here for this break. So I'll look for sells. But price has broken above this area, so I'll remodify my trend line to include these points. So I'll draw another trend line like this. Wait for the break, which is there. Let's wait, this is 81 overbought area. There's no divergence. Area of interest is formed here. Another one is there. Yeah, that one. Sell. Stop loss about there. Net target profit will be here. So you can have different profit targets along this, either here or here, depending on your personality. I tend to wait for price to hit there because the theory is price either has to come and hit this or go up. But it doesn't change the fact that sometimes price comes, doesn't hit, and goes up as well. So it can be frustrating at times. That's why maybe sometimes you have to have different profit targets. See, price is going up. My stop loss is here, this area here. Okay, price was going up. Alright, price went up and hit my stop loss. So that's why you have to have different profit targets. But I follow my strategy in that I'm confident in it.